ladies and gentlemen, what the hell? What the hell just happened? We just had one of the most red days in stock market history. Not an exaggeration. This was the single largest point drop the NASDAQ has ever seen in the history of the stock market. In terms of the larger stock market, the S&P 500 and the small caps and the Russell, it's the largest fall since the tariff tantrum of April of last year. Massive, massive turmoil and drops. Whole lot of red. All the big names down. And people are wondering what's going on. Why? What the hell happened? $1 trillion wiped out in a day? We'll get to whether it's a little bit overblown, but what's the question? Why? Was it because people finally realized that stock valuations have never been more out of whack from their actual fundamentals since 1929? Is that why? Is it because the Pope is now granting religious exemptions to using AI at work? So people are getting out from having to use AI? Is that why? Or is it because this guy on Wall Street Bets finally caved and bought all the hot stocks? And he's perpetually unlucky, so they're all gonna go down with him. I don't care about making money now. I just want all of you to lose. Is the final dumbass of Wall Street Bets joined and killed the whole market? So are you ready to freak the fuck out, as Warren Buffett says, and panic sell everything right now? It's fucking over. So let's first level set here. This is a truly massive single day drop, like unprecedented. I believe it's the 4th largest one-day drop for the broader stock market ever. It's the largest in NASDAQ history. Let's look at one of the high-flying stocks, Micron. This is Micron, the memory company that has been absolutely astronomical recently. Micron dropped 15% in basically a day. Massive drop. But if you zoom out, that brings it exactly to where it was 10 days ago. Okay, it's been such a meteoric rise that a little bit of a pullback is not insane. But the speed and the magnitude of the pullback does indicate that investors are jittery, that everybody doesn't want to be the person left in a crowded theater when someone yells fire. Everyone wants to be right next to the exit in case things get sour. And so there's a bit of a risk. And I think there's 3 main reasons, with maybe a bonus 4th, as to why we're seeing this type of activity in the markets yesterday. Most importantly, if I were to show you the top 10 most valuable companies in the world, you could probably name what all of them do except for one. Many people know all of these big household names, but when it comes to Broadcom, most people have no fucking idea. Broadcom, a lot of networking solutions, but it's become a big part of the AI backend. Okay, they provide chip services for a lot of companies. And they recently released their Q4 or Q2 earnings for 2026, and it was a bit of a letdown. They opened the earnings by reading the incredible results.
Revenue was a record $15 billion as we grew 79% year on year.
Incredible.
Driving this growth was AI semiconductor revenue at a record $10.8 billion.
Incredible.
143%.
Wait.
Oops, sorry. Well, let me restart.
It turns out he was reading the notes from last year's earnings. He had the wrong transcript and he was reading the numbers from the last year. In fact, this year's numbers were not as good. They actually went under analyst expectations. And so not only did he open with a fake start, but he had a much weaker earnings than expected. And Broadcom investors reacted in almost a frenzied panic. Broadcom shed, again, something like $300 billion in value in like minutes almost. Just incredible, because the AI results, specifically, the revenue guidance was fine. It wasn't like a disastrous earnings, but they showed less growth in AI than they were predicting previously. And that got everyone scared. By the way, this is right here of a single company, the 4th largest drop of a single company in one day ever in the history of the stock market. Okay, it's like Nvidia one day, Meta one day, and then them. And this caused investors all over to like reassess how excited they are about all these AI back-end plays that they've been putting all this money into. Is the growth going to keep going as meteoric as they thought? So the fears over big tech is one of the reasons this happened. Again, there's been some disquieting news slowly trickling out that kind of just pokes. By the way, insane for the BBC to have this be the photo of a woman blowing a bubble. That is the photo for what's going on here. So quite news. Like, for example, the FT had a piece about how since agentic AI has come out, there's been a massive increase in the number of apps being released, but the number of ones seeing any significant usage has gone down. There's no like big AI coded app that's having a huge win. Nothing's like breaking out from the noise or making a lot of money. People are starting to ask, like, where is the money? Especially because if you flash back 1 year, the AI story was fueled entirely by revenues from very profitable companies. Google, Meta, Amazon. All these companies were cash cows. They could afford to throw a couple $100 billion on AI build out, but they've been sort of tapped out on that as the spending has gotten so severe. And now, in the past 6 months, 8 months, all of these companies have started hitting the bond market, the debt market. They've started taking on debt to keep going with their build out. And that adds a lot more risk. Fidelity, for example, is backing away. People are starting to back up. The story is getting a little bit different. It went from a stock market story to a bond market problem. So that's the first part. The debt-fueled mania and Broadcom underdoing expectations is like the beginning of this disaster. The second part is that we had a surprisingly good jobs report, which doesn't seem like it makes sense. But right now we're in a world where if the jobs report is good, that means that this guy, Trump's chosen pick, is about to come in, can't cut interest rates and make borrowing cheaper. If jobs are good, he can't cut rates and make it easy to borrow. And if you can't borrow easily, the debt gets more and more expensive. And so it's this weird counterfactual where because they had a good jobs report, they might have to even raise rates. And that's got everyone spooked. That's another part of it. I've talked about the jobs reports a million times. It's not gonna be a jobs report video, but I do wanna say, if you look under the hood of this great jobs report, what you really see is that all the growth is coming in like leisure and hospitality for the World Cup, local government jobs, and then like healthcare. And everything else is seeing pretty much a wipeout. That's before everything gets revised down. Before the downward revisions, we're just seeing everything localized into this. Like the story of it is in 2026, learn to code has become learn to nurse. If you are a nurse or a healthcare practitioner, there's a lot of demand because we have a society of old people who have all the money and they're getting older and sicker. And if you want to take care of them for whatever wages they pay, then there's job growth. But if you had like a white collar job in like information technology, tech, finance, lawyers, accounting, all of these are getting wiped out. All these are seeing big layoffs. And these are like the stable white collar careers people could build a future on. So it's narrowing down to like, tourism and healthcare. And again, this is people worried about an interest rate hike. Again, under the hood, wage growth, despite job growth being fine, apparently, wage growth has been slowing. Real wage growth, with inflation being what it is slowed. So people aren't really feeling this in their pocketbooks. Again, I think to me, it seems to be that good, well-paying jobs are getting replaced with jobs, but that are less well-paying, less stable, less well-paying, less reliable. So it's not like a total job wipeout, but it is a degrading of the quality of the jobs. Household disposable income has dropped for 3 straight months, and our savings rate is at a 4-year low. People are tapping into their savings and they're tapping into whatever they've built up. Also, while the jobs numbers again are headline good, long-term unemployment, people have been unemployed for 27 weeks or more, has increased to 2 million people. So out of work people are struggling to land new positions. Basically, if you had a good job and you got laid off and you want another good job like it, you are getting stuck in a cycle for a long time. If you're willing to switch all over, you can probably find something. So these are where the problems are, but the headline number is what matters to a guy like this. He can't reasonably cut interest rates when the jobs growth isn't bad, when it's looking pretty good. So that's the second part behind the stock market trouble. The third part is actually a bit of good news. This is unequivocal good news, but it is causing some shakiness in the stock market. I prayed for this. I'm not kidding. I basically prayed for this. The third piece of news is that recently we did a story about how the indices like the S&P 500 and the NASDAQ and the Russell were changing their rules to allow SpaceX to list early, to not be profitable, to skip the seasoning period, to all this stuff. Well, in response to a huge amount of anger from people who are invested with their retirement in S&P 500, they, outside of all the rest, they stopped changing the rules. They rejected SpaceX and they blocked entry for OpenAI and Anthropic. The 3 massive IPOs this year do not get to skip the rules. They don't get to skip the seasoning period. They don't get to skip the profitability rules. They don't get to change the rules on float. It's actually awesome. It's actually just incredible news. This is extremely helpful for the passive retirement savings of millions of Americans to not be taking this risky gamble on these massive mega cap tech stocks that are IPOing. But obviously, That's panic for like Elon Musk, OpenAI, Anthropic, who are counting on this passive bid. Now, if you look at the indices, again, the Dow Jones, they made some slight tweaks to their rules. These are owned by the same company. The NASDAQ made huge changes to their rules. Instead of waiting 6 months or 3 months, it's now 15 days. No profitability rule. 15 days from IPOing, they'll be listed and passively bought. The Russell's down to 5 days from like 6 months. So these are massive rule changes. If you're passively invested in these, NASDAQ or the Russell, I mean, you are taking a huge risk on these IPOs that are unproven. But the S&P is a full 1 year seasoning period and has to be profitable for multiple quarters, which SpaceX is not. It's a massive, massive like safety for people who are passively invested in this. That means Elon Musk has no way to get access to all this passive money until 2027, like late 27 at the earliest. And that's if he finds a way to make SpaceX profitable. So just very, very good. Very, very good news. However, a lot was riding on these IPOs. And people are starting to look into the numbers and realize that without this passive bid, like this is an enormously overvalued company, significantly overvalued. Just like it does not make sense. It's a decent rocket company, but they've baked in like 100x growth that just isn't there. And so if people aren't automatically forced to buy it, are they really going to buy it at these prices? Some will, Elon Glazers will, but enough to float it where they want to go? That's a question. And so now Elon Musk has to put lipstick on a pig. Now I used AI for this photo because I thought it would be funny if I generated the same photo 19 times and paid nothing for it as a way of explaining why this makes no fucking financial sense for them. This cost them a lot of money and it cost me nothing. And they are burning absolutely horrendous amounts of cash to try and gain some sort of market share in the lipstick on a pig generating image. And so SpaceX is not listed yet, but there are ways. There's platforms like Hyperliquid where you can sort of use crypto and you could trade behind the scenes with people who have shares of SpaceX. And it's actually been tumbling. The stock has been tumbling before it even lists. And there seems to be like, there's much less investor appetite than there was now that the SpaceX thing has been canceled. So because there is now a desire to put lipstick on this pig and make SpaceX look as good as possible, because people have to actually want to buy it now. They're not just passively forced to buy it. We are seeing some real fucking shenanigans. Yesterday, we saw Google come out and say that they're doing a $920 million monthly cloud compute deal with SpaceX. Basically, it's like SpaceX makes no money, but what if they rented server space or compute to Google? $1 billion a month. That's awesome. SpaceX is now going to be profitable. But if you look into this deal, what you realize is Google owns a bunch of SpaceX stock. And they just want SpaceX to look good for the IPO so they can dump it. They have $100 billion at stake in SpaceX. And so doing this $1 billion a month deal, which was like, oh, look at the revenue growth. By the way, this deal, if you look into it, can be canceled by either party with 90 days notice. So it's a fake deal that you can put in your numbers to be like, oh, we're making a lot more money than we were before. And it allows you to get through this IPO. There is an enormous amount of coordinated effort to try and put lipstick on this pig, because if it launches and flops, it takes down the whole AI trade with it. The entire enthusiasm and stock market mania is riding on SpaceX having a big IPO. Now, even if SpaceX's IPO does underperform, there is a silver lining for Elon Musk, because there's a bit of a game of musical chairs happening right now. There's only so much investor demand, especially without the free passive income from retirement funds in the S&P 500. There's one chair. There's one chair. There's one chair. Okay? Actually, there's two chairs. Let's say there's two chairs. And we have three major companies. We have SpaceX, which is launching first with their IPO. Then we have Anthropic, which confidentially fired the IPO prospectus to try and force it through. They're next up. And then, latest to the party, they didn't know it was going to go this way, is OpenAI. And Elon Musk hates OpenAI. So actually, as an upside to him, if SpaceX goes first, then Anthropic, and they don't do that well, the investor appetite for OpenAI will evaporate. They're going to go to the public markets and nobody will bid. I mean, it's going to be way under their expected valuation. And because OpenAI is a company that is like always weeks away from bankruptcy, they need this. They need to dump on public markets. They are running out of cash. They've tapped debt markets. They've done 1 million rounds of circular financing. They need this IPO to go well. And so SpaceX, which can kind of tank it more, could end up killing OpenAI by having a bad IPO, which is crazy. Maybe that's 9D chess, maybe Elon's just an idiot. But all of this is why we are seeing some really shady moves, which is that OpenAI is now so worried about not being able to continue as a going concern that Sam Altman is going to the White House. In the past few days, Sam Altman met with Trump to discuss a government stake in the AI startup. If they can't get public market bailouts, they need literally a government bailout. They need to do what the government did for Intel, and they want to literally put this on the government paycheck. I mean, you're seeing this, you're like, fuck this, fuck Trump. But just understand that for Sam Altman to do this is a sign of enormous, enormous weakness. There is real jitters around this upcoming IPO season. We're at the end of the road for the amount of money they need. They burn billions of dollars monthly, negative, and they're negative. If they don't get this government bailout, it's like a big question mark. But of course, Donald J. Trump is excited about it. He might actually do it. So all this combines to a really hectic last few days in the markets. Now, do I think it's freak the fuck out and sell everything? No, I'm just telling you that the AI trade, there's a lot more negative stories coming out, and the absolute mania is like tapering a bit. People are like, wait, well, let's ask some questions. Now, all of this is bad, but none of it is as bad as what's going on in South Korea. So I'll end with a little quick discussion of what's happening in South Korea. South Korea is every insane, degenerate thing you've seen in our stock market on steroids. The South Korean stock market is the most degenerate on earth. They have had absolutely insane amount of gambling, margin debt, just complete vertical rise. And recently, in the past 2 days, they had a worse down day than during March 2020, which was COVID. This is their 2-day loss percentage. And it caused a absolute wipeout in all Asian stocks. They had a total collapse. Now, it's been nothing but good green days for weeks there. And people have been buying basically into 2 South Korean champion companies, Samsung and SK Hynix. These companies make the memory that is used in AI data centers and AI chips. So they're extremely valuable. And SK Hynix 2X ETFs, which is like a leveraged bet on SK Hynix, have become the largest single stock ETF in the world, surpassing Tesla and Nvidia at their peak. People are making absolutely insane amounts of degenerate bets on these 2 companies going up. The fear and greed index in Korea hit extreme greed. And then 2 days ago, it started to break a little bit. And half of the Korean population has a stock account, the highest level ever. And all of them, almost all of them, are using leverage bets, which means debt. There's trillions of won in leverage bets from average people in Korea, all on 2 companies. That does not end well in any world. So as it starts to unwind, there's a bit of like carryover panic from there over to the American stock market as well. There's an article about how streamer traders are becoming like famous, like K-pop stars, but they're calling it T-pop. They have like trading esports competitions where 2 people just trade stocks against each other on Korean streams. And yeah, the margin debt hit a record. So what's interesting is, if you look into who's buying and who's selling in Korea, these red days are from foreign investors, non-Korean investors. So basically, over the past, weeks of massive rise, it has been Korean regular families buying and foreign investors selling. So all the risk is being dumped on Korean regular people who are going crazy with speculation, and all the hedge fund investors are getting out. It's like a huge, literally, it's like set up for a massive financial panic in Korea if this goes down more than it already has. And so I want to zoom out. So this is all happening. This is all like the Friday news. By the end of next week, we could all be green again. I don't want to act like this is like, oh, it's all downtrend from here. What I want to say is the speed of this panic shows that there's like a lot of air pockets here. There's not like a strong, steady amount of demand. People are buying with debt because they expect it to always go up. And there's a lot of shakiness. It reminds me of the last scene of episode 1 of The Boys. What we're seeing on Friday is like the little bit of turbulence. It's not something you really worry about. It's the turbulence. Things go up, things go down. It's a little bit more shaky than usual. But what you're really watching for, what really makes people switch from extreme greed to extreme fear is the next round. If it's bad again, if you go from bad, then you kind of come back a bit, then it's bad again, that's when you get what happens here. Okay?
Don't worry about it, kiddo. It's just a little turbulence. Be okay.
That's 2 days, stock market down, then we're back to green. We're back to green. Everything's good.
Oh my God.
And then the line goes red. That's the third red week, okay? That's when everyone starts capitulating. That's when there's panic. Until then, it's all just noise. That's what's going on in the past way. I wanted to give you some analysis, and thanks for watching. See you on the next clip.